The Middle East conflict has entered its third week, with no signs of a diplomatic breakthrough. Instead, tensions are escalating further after the U.S. carried out military strikes on Iran's key oil hub, Karg Island. Tehran is now considering several options to counter the U.S. and Israel, including a move that could challenge the backbone of Washington's economic power, the petrodollar system. According to a Times of India report quoting CNN, Iran is considering allowing oil tankers to pass through the Strait of Hormuz only if the trade is conducted in Chinese yuan. For decades, global oil has been priced and largely settled in U.S. dollars, reinforcing the dollar's dominance in international finance since the late 20th century. Even today, nearly 80% of global oil trade continues to be conducted in U.S. dollars. Market experts say that if Iran pushes a Petro-Yuan framework, it could trigger short-term volatility across global financial markets. Currency and bond markets may face pressure, while safe haven assets such as gold and silver could benefit from rising demand. Speaking on Iran's move to the petrodollar framework, Panmudi, CEO at Enrich Money, said that any discussion of oil payments through the Strait of Hormuz shifting to the Chinese yuan is likely to trigger short-term volatility across global financial markets. Energy trade has historically been settled in U.S. dollars under the petrodollar framework, and any attempt to move away from that structure introduces uncertainty for currencies, bonds, and equities. In the near term, equity markets are likely to remain sensitive to geopolitical developments rather than purely economic fundamentals. The United States has historically defended the dollar's central role in global energy trade, and it is unlikely to easily accept a rapid transition toward alternative settlement currencies. Because of this, the issue extends beyond finance and enters the realm of geopolitical power, trade alliances, and monetary influence, Panmudi of Enrich Money said. If implemented, the Petro-Yuan framework could also influence gold and silver prices. So far, both metals have struggled to gain despite the ongoing U.S.-Iran conflict. Rising crude oil prices have increased inflation concerns, which in turn have reduced expectations of rate cuts by the U.S. Federal Reserve, weighing on gold prices. Silver has also lagged as investors worry that macroeconomic uncertainty could slow industrial growth and reduce demand. However, Anuj Gupta, a SEBI-registered market expert, believes a shift away from the petrodollar could increase demand for safe haven assets. Any shift from the US dollar to Chinese yuan in the oil trade is expected to put pressure on the US dollar in the currency market. In the wake of a sharp fall in the US dollar, inflation is expected to shoot up in a very short time, a situation that may force the US Fed to raise interest rates, leading to a liquidity crisis in the US economy, Gupta said. Echoing similar views, Panmudi of Enrich Money said, gold and silver may see support during periods of currency uncertainty, as precious metals tend to benefit when confidence in the global monetary framework weakens. However, the dominance of the dollar in global reserves and financial markets means that any transition toward a multi-currency system would likely be gradual rather than immediate. Strategists believe that Tehran's move to challenge American dominance in global oil trade could receive support from Russia and Brazil. China will definitely support a Petro-Yuan bid by Iran, as it would strengthen Chinese might in the global oil trade, said Amit Goel of Pace 360.